Hello and welcome to BCR. Let's get your trading day started with the following financial news and market headlines.
The dollar was heavily impacted by the Producer Price Index data. These figures contradict the Consumer Price Index data released on Thursday, which showed an overall increase in inflation. The newly released U.S. Producer Price Index data was almost lower than all expectations, revealing a gap between the costs paid by final consumers and the actual costs paid by producers. The dollar, measured by the dollar index, experienced downward pressure, dropping as low as 102.08, but later rebounded above 102.40. Following the data release, U.S. bond yields were on the decline, while bets on the Federal Reserve's dovish stance strengthened. Last week, a bullish wave gathered for gold prices. Following weak U.S. producer inflation data, retaliatory actions by the U.S. and the U.K. against Houthi attacks on American vessels on Thursday, and heightened tensions around the Red Sea, geopolitical tensions escalated, causing U.S. bonds to fall back and gold prices to surge significantly before the weekend. Consequently, gold prices neared a 5-day high of around $2,062 per ounce. Amid escalating conflicts, traders bought gold. Furthermore, the rebound in U.S. Treasury bonds boosted gold, as bets increased on the Federal Reserve starting significant rate cuts in March. The U.S. and the U.K. launched overnight airstrikes and naval strikes against Houthi targets in Yemen last Friday, causing an increasing number of oil tankers to divert from the Red Sea. As a result, WTI spot oil in the U.S. retreated from its 2024 high of $75.24 per barrel, closing at $72.80 per barrel. Last week, Brent crude fell by 0.5% and WTI by 1.48%. The U.S. and U.K. attacks were a retaliation for Houthi attacks on Red Sea merchant ships since last October. Despite facing economic headwinds, China, the world's largest energy consumer, bought record levels of crude oil in 2023 amid a recovery from pandemic-induced demand slumps, supporting the rise in oil prices.
We hope you enjoyed today's market outlook. If you have any questions or topics you'd like us to cover, feel free to leave a comment below. And remember to join us tomorrow morning for the freshest news and insights.